Hey guys, it's Hannah Bernard and this is the weekly market wrap-up. Before you all head off for the weekend, we're here to tell you what happened in the markets this week. The Fed's decision last week to delay QE tapering caused global markets this week to pull back substantially, as traders now nervously anticipate the outcome of the pending debt ceiling debates, which could lead to a default on the U.S. national debt and a federal government shutdown. Equities markets were up and down this week. All three major indices were up over 0.5% at the start of the bell, buoyed by positive employment trends. However, both the Dow and the S&P 500 gave back a significant portion of their gains and essentially traded flat for the rest of the session. Speaking technically, what the equity market is experiencing is a momentum squeeze, where higher moves up require more bullish sentiment, something that this market is losing rapidly. Unless a fundamental driver provides a much-needed catalyst, this phenomenon has bearish implications for the rest of this year. All right, let's talk currencies, which were overall pretty bearish this week. The US dollar attempted to claw its way out of the 80 level after suffering a pronounced drop last week from the Fed non-taper. However, its current efforts are not nearly enough to avoid short-term technical damage, and a trip to the 79 seems more and more likely. The dollar-yen pair was on a steady decline throughout this week, despite a noticeably weaker dollar. Intraday trading moved the pair higher, but traders are taking a cautious approach ahead of the debt ceiling debate. The euro-dollar tumbled this week when it failed to secure the 136 level, with Wednesday's price action representing another failure of a challenge at a lower valuation. As always, let's talk about our winners and losers and our picks for the week. The winner for this week is Kior Inc., ticker symbol KIOR, who absolutely killed it this week. Company shares jumped over 66% during intraday trading after it received a $50 million commitment from a key investor to double its production capacity. This is the single biggest jump in share price since its June 2011 IPO. However, investors may want to look carefully at the fine print before jumping on board. Today's impressive move still puts the price right at its 50-day moving average, and the company's quarterly income statements continually run in the red. While the cool $50 million will certainly help matters, Kior is still high-risk, high-reward investment. Our loser for this week is JCP. Once again, JCPenney lost over $3 of per share evaluation in just a week, highlighting the fragility of the so-called recovery plan management has spoken of. JCP has a very poor outlook, and the company is making little progress in terms of cost margin and infrastructure, ensuring that whatever gains in retail comps that are achieved are sucked right back from rising liabilities. Well, those are our winners and losers for the week. Now we want you to weigh in. You tell us in the comments section below what company is the top pick and the loser for the week. And last but certainly not least, let's talk about precious metals. Both gold and silver initiated a basing pattern along their 50-day moving averages, which has positive implications should the pattern continue to rise. A breakout is possible next week as the fear trade is back on the looming debt ceiling crisis. Palladium is riding a more convincing basing pattern, although it is still trending below both the 50 and 200-day moving averages. It's not clear how a potential fear trade for the monetary metals would affect palladium, although it should turn out to be a net positive if the dollar continues its downward slide. And that wraps it up. Thanks again so much for joining us for another weekly market wrap-up. I really hope you enjoy this weekend, but before you leave, make sure to subscribe to our YouTube channel and find us on Facebook and on Twitter. For VNN, I'm Hannah Bernard.